Financial markets have been generally a little bit quieter this week, not helped by the fact that Thanksgiving generally takes about 2 days out of the US markets, and as a result in Europe we do see volumes significantly lower and certainly volatility lower. But saying all of that, the markets have generally improved after what has been quite a difficult 3 or 4 weeks. The key feature for the week has been the gathering of the Eurogroup meeting members, and they're starting their discussions to discuss the EU budget. The conversation that appears to be coming out from the first day's proceedings is that it's unlikely that significant progress is going to be made at this particular meeting. But regardless of that, we are seeing that the euro currency itself has had a better week. Risk has come back into that market. This first chart shows the euro recovering probably say half of the fall that we've seen in the course of the last 4 weeks, now trading back up to 129. So that euro strength has been certainly quite helpful towards equities. The other key move that we've seen this week has been that 10-year bonds in Spain having sort of nudged up to a high of 6%, coming back now to around 5.6%. So certainly some of the pressure coming out of Spanish bonds at this stage. So if the other key factor, so in the currency market this week, I noticed was the sterling market. This is a chart of the pound sterling. Again, sterling's been in a bit of a downtrend recently, and that is good news for Mervyn King. Mervyn King has been concerned about the 8% appreciation that we saw between June and September, which really put paid to around half of the devaluation in sterling that we have seen during the course of the last few years since the financial crisis began. His concern obviously is that that is just making us a little bit less competitive on the currency market, just at a time when we need to get our exports going at the moment. So this recent downtrend we have seen has been quite positive, but we are going to be looking next week at a second reading of the third quarter GDP number. Now this was the number, you may recall, came in quite much better than expected at around 1% quarter on quarter. So it's a second reading of that number. It's not expected to move markedly. Indeed, we hope that it will confirm that the third quarter made as much progress as we enjoyed. Mervyn King will again be speaking next week. He will be publishing some of the public sector net borrowing numbers next week, and he will be giving a speech. So think forward next week to a few more domestic issues around the Bank of England. You remember that the last speech he gave was typically very downbeat. Turning to a few stocks, the chart here I want to show is a 5-year chart, and it's really highlighting Samsung versus Apple. It's been widely documented that the Apple share price, which has had a stunning year, peaked at around 40% year-to-date performance, has come off quite sharply. There have been concerns about a number of forward-looking issues for Apple, which has just taken the top of it. But this 5-year chart shows that actually over that period of time, Samsung has outperformed now Apple in stock price terms. It's not as big a company. Samsung is worth around $200 billion and Apple is worth around $520 billion. But these are the two heavyweights in the whole mobile phone space, the smartphone space, and we have a note on Samsung if those are interested. But just to report that in Korea this week, Samsung shares hit an all-time high. The other feature for me, what has been generally flat markets, has been the strength we're starting to see in the Japanese stock market, up around 6% at the moment. We could spend ages talking about what is wrong with Japan and what is happening out there at the moment. But so it's interesting to note that we are seeing some stimulus to the equity market at the moment. I think this revolves a little bit around moves of the Bank of Japan, and whatever we think about what the Bank of Japan are up to in terms of providing stimulus to the economy at the moment, it does seem to be benefiting the currency market, and indeed that is helping the exporters, and that is providing some relief to some of the equity movements this week. So about a 6% improvement on the Nikkei this week relative to a flat market in the Western world. Just a few stock picks for this week, some features. Looking at Aviva, they have now found a new boss who's going to take them forward. He was running AIA. He appeared to do a very good job there, particularly taking AIA into the Asian market. Will he do the same for Aviva? there's always a fear with new management that they will come in and they'll just start off by kitchen sinking the books. So we always have to be a little bit careful moving into a stock just prior or just after a new management change. But nevertheless, the market has taken that particular appointment quite well. And also, I'm just going to mention that we're commenting upon BG Group, which has been a preferred play for us this year. We had that major disappointment with the production collapse for 2013 and 2014. And it's taken a little while for the stock to find its natural sort of level. It did touch £10, but back up to 10.67. There are some mutterings around about them having to firm up their defences with the appointment of Goldman Sachs and Rothschilds to the team, just in case somebody puts a bid in for the group. It is vulnerable at the moment, and we do think there's a value play at the bottom here with BG.